President Donald Trump says he has reached a trade deal with Vietnam following weeks of intense diplomacy between the two countries. This comes ahead of the July 9 deadline that would have seen much higher tariffs imposed on Vietnam's exports to the US. Under the deal, a 20% tariff will be placed on Vietnamese exports to the US, with a 40% levy on any goods deemed to be transshipped, meaning goods with components from other countries that are then routed through Vietnam. That measure is likely directed at China, which has used other nations to skirt US imports duties. While the new US levy on Vietnam is lower than the 46% initially announced by Trump in April and later paused, it's double the 10% universal base rate being applied elsewhere while negotiations are taking place. So the risks are still tilted to the downside for Vietnam, according to analysis by Bloomberg Economics. The looming question now is if China will retaliate. Despite its trade truce with the US, China is getting increasingly wary of US efforts to forge deals that could isolate Chinese firms from global supply chains. And given China's positions as Vietnam's largest trading partner and a key source of inputs for domestic production, any retaliatory moves could have an outsized impact on Vietnam's economy.